Aloha everyone, Joshua Hayes at BigWaveTrading.com. There's a lot of new members lately, and just in case everyone is not familiar with how everything works, there's good markets to trade, there's choppy markets to trade, and there's bad markets to not trade. This is a choppy market right now, so while new long positions continue to trigger overall, and while I still remain very heavily invested with very little cash on hand, the signals are not that great. They seem to be overall diminishing. My scans seem to be getting on my charts more and more yellow and not more and more green. That being said, they're not bad. Doesn't mean that we can't start rallying higher sooner than later. But what it appears to me is that we just need to spend some more time consolidating. So if that's the case, there will continue to be very few new long signals. They'll continue to be not the greatest long signals, which is why you continuously see me putting only 0.5%, 1%, 2% of my capital per new long position. When you start seeing me put 10%, 20% per long signal, then you can get excited. 5% actually, 5 to 10%. Never going to probably get over 10% that often in new long signals. And then whenever you see perfect setups with just charts that are just loaded with green bop like VVVC, then you'll know that the market's in the right condition, especially if it's trending higher on heavier volume, or if we've had a major sell-off and we're curling off extreme oversold conditions on strong volume. But right now, it's a choppy market. The S&P 500 is starting to look a little bit better. BOP is starting to go the other direction, so that's always good. Always like to see that. It was looking, pretty sketch there for a while, but we're still stuck in between multiple resistance and support levels on all of these indexes that you see. So I would expect more chop, especially as we head into summertime. And like I've said lately, this is how we're trading now. Oh, it's hard to see how it's going to be much better in the next month of May, which is historically one of the worst months overall for stock market returns. But that being said, I still do have some new long signals this evening. Before I go over those, I want to just go over the sell signals really quick. PTN is triggering a 50% end of day sell signal. It's closing below its 20-day moving average on above average volume in red bop. I have half of my stops right here on PTN. So if it moves below 122, I'll be out of half. I then have 25% right there, and my final 25% of my position on PTN, that's where the long signal was, back where you see the white arrow, is right there. So 25, 25, 50% on PTN. And then IMMR is re-rolling over back below the 50-day moving average. I thought for some odd reason it closed below it before, but it was just slowly rolling over here. It's now re-rolling over, so you've got one hilltop, you've got a second hilltop. Still, only two lower highs and two lower lows, not a series of three, or else it would be a full sell signal. But the move below the 50-day moving average and the close below the 4-4 low of day on heavier volume is a 50% sell signal. I am moving half of my remaining sell stops to just below this low right here, because 1107 is the low on Monday, but the 4-4, excuse me, I'm so wrong. But the 226 low, 1101, is just a few cents away from 1107. So for right now, half of my sell stop will be at this low. Now you can put half right here if you want, but since we're only 6 cents away from this low right here, I will have half of my sell stops on my remaining position right there. And for now, I have 25% there and 25% right there. So if this low goes, then on heavier volume, then I'll probably be consolidating all the stops. But for now, it's 50, 25, 25 on IMMR. And then ACMR, this one was always speculative, but because it had some huge recent EPS and sales growth, and it was an IPO recent issue, actually, I figured it was quote quality. But just because something's quality obviously doesn't mean it's going to succeed, and ACMR did not. It is now completely rolling over, closing below this low a day here. The signal day was here, so it's closing below their most recent low, and the signal date's low a day on heavier volume for an 11% end of day loss. I still have stops here and here on whatever I have left in my position. I will now be splitting it into thirds. 1/3 for me here, 1/3 here, and 1/3 here. I'm willing to give it to this low before I completely bail out of ACMR. But on an end-of-day basis, using the rules of this website, it is a full sell signal. Now getting to the new long positions really quick. These are not super high quality. They're ENSV is only a $1 stock. The only reason why I'm listing it as a quality long position is because it's perfect speculator quality. I already had a long position in ENSV back here. If I wouldn't have been completely shaken out, I would have a 123% gain in this stock in right around 6+ months. Not too bad. So ENSV has already proven once for me that it can make me money. Hopefully it can do it again as a perfect speculator scan stock. But if you're looking for safety, it's not here. The stock is extended from its 20, 10, and 5-day moving average. It's touching its 5-day moving average, so that salvaged it as a new long because the BOP and volume surge was strong. A lot of open body candle bars. It's doing more work at the high of the day than low of day. A lot of bullish tails on these candle bars, and it's rounding higher, not V shaping higher. If it was doing a V move, I would not like it, but it is rounding off the 50-day moving average. So pretty good overall pattern going back here to the April lows. I want to get long ENSV, limit order 103. My first cut loss level is right here. These lows right there, 90 cents. My final cut loss level, I'm willing to give it all the way down here, 85 cents. You could do even a fourth here, a fourth there, a fourth here, and then a fourth here. You know, it's basically up to you. I may change my mind and decide to use 77 cents as my final stop. Might do a third here, a third here, and third here. I just know if you're a new trader or if, you know, you're taking these positions long, you're just going to want to keep your size small and use the closest sell stops possible. I'm willing to give it room to work because I understand the kind of market that we are in. I understand that stocks might not move up immediately, and if they start moving back at all, let's say I lose green BOP here or it starts pulling back on heavier volume, that's it. I'm consolidating all my stops and I'm out. Now, if you don't understand how to do that kind of stuff, and or if you're really bad at cutting your losses, first off, don't take this trade. Second off, just use those first stop levels that I recommend. But ENSV, 0.5% of my account capital was in my perfect speculator scan, confirmed in my price volume BOP surge scan. Normally would be 1.5% of my capital, is extended from the 20, 0.75%, extended from the 10, 0.5%. Then I also have ad signals that I want to go ahead and take in SEND, ERI, and SKY. SKY and ERI basically have a similar kind of pattern except for ERI is gapping up. ERI and SKY are both perfect speculator quality. ERI used to be CAN-SLIM quality. SKY is currently CAN-SLIM quality. They both have very nice short-term chart patterns. You can see where I initially entered in SKY and ERI. It was a long time ago, way back here. So I've had these positions for quite a while. SEND is a recent position ad signal. Now the same thing is in effect for all these. All of these stocks are extended. SKY is extended from its 20. SEND is extended from its 10 and 20. ERI is extended from its 10 and 20. However, I really like the way all three of these chart patterns look, but you can't get too crazy. SKY, 0.75% of my account capital. Limit order, 25.95. First cut loss level, 24.56. Then 23.36, then 21.88 for me. This was CAN-SLIM quality and perfect speculator, normally 1.5%. Since it's an ad signal, 0.75%. If for being extended, it should also be 0.5%. So I actually might have to drop this down to 0.5%, which is where ERI and SEND are. They were both in multiple scans. They would normally be 1.5. They're extended one time, 0.75. They're ad signals, so, you know, it should technically be 0.5 and then maybe even 0.25, but I don't want to take such a small position. Even 0.25% of my account capital is still at least $1,000, and I'm only paying $1 commissions, but I just feel like that's just too small of a position for stocks that look like this. So for SEND, we'll go ahead and keep it at 0.5. ERI, 0.5. SKY, 0.75% of my account capital. The more just thought about it. Sky limit order, like I said, 25.95. Send limit order 28.32. First stop that I recommend for you guys, 26.50. 24.58 final. Once again, you though could use this level, this level, this level, this level, this level, or this level. It's completely up to you. It's up to your risk tolerance. ERI limit order 41.15. My first cut loss level on this ad, 39.55. Then I currently have a stop here at 33.55 and a final stop right here at 31.20. All right, everybody. The long positions have low asset allocation because they're extended and we're in a choppy market. If these positions are not extended and they're rounding out off perfectly off the 5, 10, 20, and 50-day moving average with these kind of chart patterns, and our market's in a strong uptrend or coming off a very extreme oversold condition on strong volume, then you can push, for now, small, tiny, measured positions on an end-of-day basis. Even intraday, day trading hasn't really been the most exciting place to be. Stocks that should be gapping up and then following through, breaking out to highs, morning highs, they're not quite doing it. See most day traders spinning, churning their wheels right now. My best bet for anybody looking for alpha, come into the chat room in the morning and we'll discuss it. It's to day trade these SPY, call, and put options intraday. Even with the index barely moving at all today, the calls made 20% moves and the puts at one point today made 40% move intraday. So if you want to learn how to trade those, come on into the chat room. But on an end-of-day basis, it looks like it's going to be slow. And right now, there's not a whole lot of action in the small cap stocks, the low float stocks that I like to see moving in the pre-market for big gains intraday. It's just a slow tape, everyone.